Okay, MegaWhale team, welcome back to the channel. Thanks for tuning into today's video. We're going to go ahead and take a look at the Bitcoin chart. And the main reason I'm on here today talking about Bitcoin again and not an altcoin, which we'll do tomorrow, is because I want to discuss the Pi cycle indicator, an indicator that has pretty accurately predicted the bottom and the top within about a 3-day variance pretty much the entire time. And this is an indicator that's once again flashed a entry or a low or a bottom exactly where we predicted that to actually occur 8 months ago. And you may be thinking, what is the Pi cycle indicator? And we're going to discuss all that. We're going to discuss why it's important, what we can use it for, what it's actually telling us, and what it means for Bitcoin going forward. Before we get into any of that, go on down to the pinned comment down below, click the link, join our Telegram channel. You'll get access to our free channel in Telegram where we post daily updates, market analysis, a whole range of important information. As you can see over here, we've been talking about this on the Telegram channel quite a bit. And of course, if you're interested in our VIP trading channel, you can get access to our VIP trading channel where we do VIP trading signals, exclusive market updates, direct message access, and so much more. Go ahead and contact me to join. Let's dive right into it. So the Pi cycle indicator, we just mentioned briefly what it is. A combination of 4 separate moving averages to give an indication of whether or not the market is overheated or massively oversold. And we use indicators such as the red line, and we'll zoom up a little bit so you can see it a little bit better. So you should see over here, we have our Bitcoin low long SMA. I'm going to zoom in a lot so you can see it. Bitcoin low long SMA. This is the 471 EMA. We had the green line, the Bitcoin low short EMA. This is the 150 EMA. So this is a shorter moving average. This is a longer moving average, right? Then we have the yellow line, the Bitcoin high short moving average. And this is a 111 SMA. And finally, we have the white line up over here. This is the Bitcoin high long moving average. And this is the 350 SMA. So you're thinking, what does this all mean? So essentially, we're not going to discuss the highs. We're going to talk more about the lows. And every single time we see the yellow and the green line, which is the 150 and the 111, the shorter moving averages, cross below the red line, all right? Remember, red line is a 471, so a very long moving average. We get that indication of that Pi cycle low. And that's happened basically within a 3-day variance of the exact bottom on 2 occasions now. And guess what? If we zoom in over here, we can see it's actually occurred once again. We've hit that Pi cycle low once again just within the last 2 days. That has occurred over here at $18,800, exactly what we predicted, 8 months ago, guys. In July, look, our prediction was July. 8 months ago, we predicted this. It hit exactly where we expected. And of course, that Pi cycle has now printed a bottom, a Pi cycle low. Does this mean the bottom's in? And this is a question we're going to answer today, guys, because this is a really big indicator. Obviously, this indicator has been, incredibly accurate at actually predicting, should I say, that exact bottom for Bitcoin within, like I said, within a 3-day variance. So is the bottom in? And unfortunately, guys, we still don't have a very clear answer. And even though we are still massively leaning towards the fact that the bottom's in, and now we've got this indicator to support our hypothesis that the bottom is in, and obviously all these technical indicators that I can use, and the charts and the market analysis, everything we've done through within the last 8 months suggests the bottom's in now. The one thing that does still suggest that the bottom may not be in, and that is global economic data. And of course, the FOMC meeting is coming out in 10 days, the 26th to 27th Washington, D.C. Date, so 11 days from now. The FOMC meeting, they may hike the interest rates. And we've talked a lot about this, guys. We've talked a lot about the impact that increasing interest rates can have on the economy, in particular on asset prices. All right, we zoomed in on this little chart over here. So even though we have all these bottom signals, all these technical indicators are telling us, the market, the charts are telling us the bottom's in, if interest rates continue to rise, it doesn't matter, we will continue downwards. And that is why we still have in the back of our mind the potential to go down to $12,000. That potential for that last drop, or even potential drop to 16,500 as a scam wick, and then push back up. Until we get an actual reversal, an actual market reversal, we don't have confirmation that the bottom is in, even though indicators are now starting to suggest it is a higher degree of chance the bottom is either exactly in or incredibly close to the bottom. And this isn't new news, guys. Like I said, We told you 8 months ago this is where the bottom should be. And if the economy wasn't in a shit position, if the economy was okay right now, just okay, it wouldn't have to be great, just okay, this would be the bottom. I'd be highly confident the bottom would actually be in right now. But like I said, we have this data coming out in 10 days, and we can only speculate what it's going to be, and we assume it's going to be worse. We assume the interest rates will rise, and therefore we have to be aware of the possibility that the market could actually take another downturn. We'll go through this real quickly. Interest rates rise as a method to reduce or combat rising inflation. Now we already know inflation was at 9.1%, and obviously we already know one thing, that the real number for inflation, we'll just go to my Twitter real quickly. I did a little calculation over here. It was actually between 19.7 and 21.3, right? 9.1, we talked about in our last video, is a complete false lie, all right? Even though it's rising inflation, 9.1 is higher than the last period, which was 8.8. It is definitely higher than 9.1. It's closer to around 20%, okay? So inflation is still rising, therefore they're gonna still wanna increase its interest rates. So interest rates should rise. We can assume there's a higher chance that interest rates will actually rise than not rise, right? If they don't rise or they remain the same, it'll be quite confusing. We do expect them to rise. The question is, how will the market react? And we're going to kind of talk about that later in the video. But interest rates rise. We talk about interest on debt rise, available household cash flow decreases, cost of goods rise, retail starts selling their assets as they need more cash flow to repay their loan obligations or debt obligations, or just have more money because everything costs more money. Companies sell assets to reduce their balance sheets to increase their future, to make their future cash flows look more healthy, all right? So they don't, their debt to service ratios decrease, so their stock prices remain healthy, their companies remain healthy, don't get wrecked. All right, so everyone's getting rid of these risk assets, and they've been doing this for a very long time. We told you about this in November, and companies have been doing it since then. You know, they were doing it before, you know, it even became public knowledge. Months before it became public knowledge, this was occurring, okay? And we warned you about this. We told you this was going to happen, and it's not over yet. The economy has still a long way to go. You know, the economy is still going to have a massive downturn still. We're going to see other asset classes, houses, get wrecked, you know, but like I said, the financial markets and cryptocurrency, these risk assets, they move faster, which means they suffer quicker and they recover quicker. They bleed sooner and they recover sooner. So the exact bottom for these assets, these risk assets, will not be the exact bottom for the housing market, and it won't be the exact bottom for, you know, like the GDP loss and all that other kind of stuff. I want to get into it. We're not here to talk about economics too much, but what I'm trying to say is the financial markets, although they are correlated to each other and they are correlated to the broader economy, there's still a degree of variance. And we talked about the variance in the other video. We showed you, I think it was, I just want to zoom out real quickly and show you this chart. We discussed about systematic risk. We discussed about variance between different asset classes. We discussed about variance between different, you know, economic, what could we say, different economic assets in general. All right, so cryptocurrency, stocks, housing, you know, bonds, all those things. You can list a whole range of them. There's still a variance, even though they're positively correlated. They're not perfectly positively correlated. There's 0.7 degree, all right, not a 1 degree, a 0.7 degree. So there is correlation, but not perfect correlation. So we can't expect them to behave exactly the same at exactly the same times. It's going to be variance, all right? That's very important to understand. There is variance, and that's another reason why, even if interest rates rise, there's always a chance that we see this little drop and then we continue upwards, because there is variance, and it's very difficult to predict the exact bottom for markets that aren't exactly correlated. And I've been stressing that on this channel. We're going on a bit of divergence over here. I want to kind of bring it back to the pi cycle chart over here, and it's over here. But as we can see, guys, the pi cycle low, it didn't tell you, you know, it didn't say, you know, we're going parabolic from here. Every time we print it, we've had this sideways action, and there's a time for accumulation. And the same thing's going to happen over here, guys. We're not just going to see, and I've been telling you guys for a very long time now, we're not just going to see a rapid move up like this. If it happens, I'll be very, very shocked. It'd be incredibly shocking. It won't happen. At best case scenario, guys, we move slowly to around, we maybe get a parabolic move to 28, 30, and then we bounce around and move slowly along this trend line until the end of the year, and then we finally break out of this macro downtrending channel that we were in, and we can show you the channel is downsending resistance. And until we break that downtrending resistance, which we have on, I think it's this chart over here, we can zoom in and show you, we're not going to get that explosive rally. Here's that downtrending resistance, take it off log, here it is, all right? It's downtrending resistance. You know, this could take into the end of the year break. So until we break that, we're not gonna get this rally upwards. We can expect some slow growth or some sideways price action at best between now and then. Obviously, that would make more sense with a weakening economy or economy that's already weak and already suffering. It's hard to imagine Bitcoin going parabolic right now. We talked a lot about how we don't think Bitcoin would depeg from financial markets and traditional markets. And we talked about that in one of our collaboration videos with Wolves of Crypto. And I'd love to discuss that again in another video. But if you want to go and find out more about that, check out the other videos. So I guess today's video is a really important one because it does suggest a lot of things. And the main point of today's videos is to really tell you guys that more and more indicators are now turning bullish. And this is a really big one, the pi cycle one. And you may be thinking, why is it even called pi cycle? Well, if you take the 350 moving average and divide it by the 111 moving average, you get a number that is 3.153. And you may be thinking, well, that's not quite pi. Pi is 3.142. But this is the closest you can get to 3.142 by dividing these two numbers, or two any numbers really. So that's why it's called a pi cycle. A little bit of information there for you if you cared. Anyway, guys, we're going to wrap it up around there. I think that's enough information for today's video. Just a quick summary. More and more indicators are turning bullish, and we shouldn't be shocked at that. We should be very much aware of that, and we should have been predictive of this. Of course, this bottom area was not a place to be fading. We shouldn't have been shocked that this held support. A lot of people are expecting us to go to 5,000, 4,000. I've been telling you for months that anyone who's saying we're going to go under $18,000, they don't understand the charts. They don't understand what the charts are telling us. But the charts have been suggesting this area is a major support for a very, very long time, and it will remain a major support for a very, very long time. If we do lose it, it will become a very strong resistance. And until we lose this level, we have to treat it as such. So more indicators are turning bullish. More indicators are suggesting, well, the bottom is either in or is very, very close, and we should be paying attention. The only bit of data I see right now that will suggest we can go lower or will go lower is that of data we don't have access to yet, and therefore it's purely speculation. We can only speculate that interest rates will rise, therefore we can only speculate the bottom is not in. Right now, the hard data is suggesting, yes, the bottom is more likely in. There is a chance we go lower, but like I said, that chance is based on information we don't have access to yet, and therefore we need to remain patient and calm until we get a reversal to confirm where we are now. Actually, before we end the video, I want to actually talk about that reversal, because you're probably thinking, okay, cool, let's talk about the reversal. So what would actually need to happen for us to see a reversal for Bitcoin and therefore actually get this confirmation the bottom's in? Because although indicators can tell us, the bottom's in, they can disappear. Like for example, if this flips back around, flips back around, this disappears, and therefore the pi cycle bottom is no longer in. And that's one thing about indicators. They can change day to day. So it's very important we kind of keep that in mind. So we would need to see a break over the 200 moving average. Straight up, very, very basic stuff over here. We've been telling you for a long time. The 200-day moving average is one of the best indicators to predict overall macro trends. All right, 200-day moving average, best to predict overall macro trends. And if we flip that, we will be flipping that into more of a positive uptrend. All right. Will the uptrend begin at that point? Yeah, we'll have an uptrend at that point. Again, the 200-day moving average is kind of sandwiching itself between this level over here. So we break through this major resistance zone, all right, push up over the 200. We've got this clear gap in the market, and we'll talk about that gap in our previous video. And what I'll do is I'll quickly show you the gap over here. We can see the gap very clearly on the VPVR. Let's change this to 200. We can see that gap present on the market. This is low volume trading range. See how massive we have these massive high volume areas, this huge low volume area. All right, this is a run it back area. This is where we would push over and we would just absolutely pump back upwards over here in a very short matter of time. Not a day, not 2 days, but we would move up there relatively fast in comparison, to the same kind of speed we moved down it. So we'd run it back, all right? But even then, guys, we're not macro uptrend. We have a reversal. At that point, the bottom is in. At that point, we've had confirmation the bottom is in. At that point, everyone's pretty confident the bottom's in. But we haven't had a reversal. We've had a short-term flip of the range within the macro descending channel. We need to flip the macro descending channel to break this downtrend. If we break that downtrend, taking a measured move analysis, guys, real simple stuff. Let's just go ahead and do that. Take it from the first initial top of the channel, the first initial bottom of the channel, apply to the breakout point, we can see that would take us to about 48 plus, all right? And 48 is that major resistance, all right? So we have our major resistance over here. That is not my pen. Major resistance over here and 48, okay? So short-term range flip occurs here, pushes up into this range here. We got massive resistance here we need to break before we flip a macro trend. When we flip the macro trend, the next stop is a $36,000 to $37,000 major horizontal resistance. This is a flipping point that allows us to gain momentum. If we flip this point, we have positive momentum. The RSI will show positive momentum break, and then we push up to 48K. If we break 48K, we're flipping that local high point. All right, we're flipping these resistance points. All right, and that is when we push confidently to a new all-time high for Bitcoin. That is it, guys. I hope you enjoyed today's video. We'll catch you in tomorrow's one. We're going to do an altcoin analysis tomorrow, provided the market doesn't do anything rash or anything significant overnight or throughout the day. If everything kind of remains where it is now and nothing's really changed, we'll do an altcoin video. Okay, I'll catch you tomorrow. Cheers. Okay, guys, we're going to be taking a quick look at Bitget, and now Bitget is where I personally trade. I highly recommend sign up to Bitget with the link down below. Bitget is probably the best exchange out there if you are a trader. It has a variety of features, and the best things about Bitget are a few things. Number one, it's non-KYC. Well, KYC is completely optional on Bitget. Now, there's a whole variety of exchanges out there nowadays that have gone completely centralized, sharing your personal trading information and information of decentralized governments and different governing bodies. Bitget allows that option to be left to the individual, to the user of the exchange. You can decide to non-KYC, you can decide to KYC. It's completely your choice. Another really beneficial thing about Bitget, and the biggest reasons why I'm sitting here actually recommending Bitget to all my followers, is that it has 0.02% trading fees. All right, this is significantly lower than any other cryptocurrency trading exchange out there. FTX, Binance, could name a bunch more. KuCoin. It is significantly lower, by 500% lower than the lowest exchange out there, Binance. Another big thing, guys, is there's no global restrictions on who can use Bitget. Anyone from anywhere can sign up to Bitget and get access to the entire exchange of all the tools, whether it be futures or spot. No matter which country you're in, you can use futures and spot. If you're in America, for say, and you want to get access to more spot trading pairs, such as Binance Global, and you can't sign up, well, guess what? They've got 250 different spot trading pairs here on Bitget to get access to, and you can get access to all of these. If you're in Australia and you want access to futures market and you can't trade futures, you can do it here on Bitget. You can get access to the future market and start trading with leverage. And finally, guys, if you do want to sign up to Bitget, go ahead, click that link down below to sign up to Bitget, and you'll get access to the reward center over here, which enables up to $4,000 in rewards by completing 5 tasks. All right, guys, we'll get back to the video. Thanks for listening to that. Okay, guys, I want to take a quick moment to introduce the Become a Trader course at the end of this video. This course was designed by myself and Wolves of Crypto. We put together a whole variety of knowledge to create the most cohesive, understandable, and beneficial trading course there is on the market. If you're interested in learning how to become a trader, if you're interested in learning how to use technical analysis, if you're interested in learning how to apply market analysis to different cryptocurrencies, this is a course for you. We teach you everything from the fundamentals, the basics about what cryptocurrency is, how to trade cryptocurrency, mastering the craft of cryptocurrency, diving into a whole range of technical indicators, market structures, and teaching you how to utilize these when finding trades and applying risk management strategies to become more profitable over time. We even dive into market psychology, human psychology, and provide a variety of different videos and educational content, including courses and quizzes to assist your learning along the way. If this is something you're interested in, guys, go ahead and contact us down below at the cryptoacademycourses@gmail.com. We'll send you an email back with all the course information, the structure, the payment details, and everything else you need to know. That being said, guys, I hope you enjoyed the video today, and we'll catch you in the next one.